All right, guys. So I know so many of you have been wondering, how do I lower my tax bill, or how do I eliminate my tax bill altogether? Now, listen, this is not to be financial and or legal advice. This is for entertainment purposes only, but I'm going to give you a handful of these so-called loopholes that the rich use in order to pay very low to minimal to no taxes whatsoever. Did I mention everything I'm about to say is completely legal? Yes, it is completely legal. All right, so the number one way that you can avoid or pay less taxes is to claim depreciation. Okay, let me elaborate just a little bit. I'm not gonna go here on a thesis with you, but depreciation is effectively something that the IRS claims that you can take and claim for yourself off of a property or an intangible property or anything that you buy for your business, like a business vehicle, or if you buy a house, like an investment property, an Airbnb, let's say, you can take depreciation off of that. Now, we're not talking about depreciation like, oh my gosh, this asset is depreciating in value, like it's going down in value by half. Like, that's not the case. This is called paper depreciation, if you want to Google that. Paper depreciation works much differently, right? Paper depreciation works where you effectively get to take a certain percentage of that asset. Sometimes it's 100% of the asset in the first year that you buy it. Sometimes it's just a certain percentage of the asset in the first year that you buy it. And you get to actually take that amount of money and wipe that off of your taxable income. So you're able to pay way less taxes if you have enough depreciation, right? A really good example of this would be buying real estate. Buying real estate is a really smart way that the ultra rich avoid pretty much all of their taxes, right? Because they can buy real estate, turn them into Airbnbs, investment properties, right? Then take the depreciation from the real estate, which is quite high. At that number there will then offset a high number of taxes that they would have had to pay if they didn't have that depreciation to offset that number, right? But since they do, they're able to take that loophole, even though it's totally illegal, but then they can lower their taxes. That's number one. All right, so number two is not going to be so exotic and different. It's nothing that you probably haven't heard before. This is basically claiming your expenses, right? So literally claiming your desk, right? Your laptop, your camera, right? Your light, your tree thing. Like whatever it might be, right? Literally claiming your expenses, the things that you use to do business. So I forgot the microphone. Like all these things add up, right? So all these expenses, right? Everything that you use to do business. Now this is just like, I named like 6 things, but I actually have like 100 different things that I can expense, right? And that doesn't even include travel. That doesn't include lunches, dinners, like business related items, right? Of course, these can't be random lunches, random dinners. They need to be business related. But when they are business related and you have an LLC and things like that, or you have a sole prop, etc., and you're doing this the right way, you can write off these items. You can write them off as expenses, lower your tax bill, and basically it's sort of a loophole, I guess. Not really, but it's a way to lower your taxes. All right, so number 3, yes, you can hire your children. So if your children are under 18 years of age, yes, you can hire them. The IRS does allow you to hire your children and make them do things and have them work regular business hours or hours that they can work after school, etc., things like that, right? And yes, you can pay them an amount of $13,995 in the year of 2023. And with that being said, you get to claim the wages that you pay them for their work. So hire the children, pay them, and then deduct the wages that you pay them, because wages are deductions. So every employee or every 1099 contractor that you have working for you, you pay wages to. And that is a dollar for dollar deduction. So if you don't know what I'm talking about, what I mean is basically every dollar that you pay to your contractor or employee, that's a dollar that you get to deduct off of your own taxes. So wages, paying people, is actually a good thing. And the IRS likes this because you're stimulating the economy. You are paying employees. You're basically putting money in other people's pockets, and therefore they're going to award you by letting you pay less taxes for it. So yes, you can hire your children, and that is a strategy that many people don't actually know about or don't use, but should use when applicable. So yeah, that's a little bit of a loophole maybe, but yeah, hire your children. Okay, so number 4 is called rolling forward your losses, right? This is really something for the ultra rich or people that just make a lot of money, right? I'm talking about, $5-10 million a year in revenue or so. And let's say that, they owe a ton of taxes, right? But they also have a ton of losses, right? Net operating losses. Google that. And with those losses, they're able to actually exceed the amount of tax that they owe. So with that being said, the IRS doesn't exactly give you the difference, right? They don't take how much did you earn versus how much did you lose, and they do a subtraction, addition deal and give you back a check. That's not always how it works. How it works generally for these earners in this bracket, right, is you have net operating losses that you can roll forward, right, to another year, to a future year, where it's maybe more advantageous to utilize those losses to offset taxes. So maybe it's a year where your taxes actually are more on par with your losses, or maybe where you just need a little bit more on your losses to actually balance out your taxes to get to close to zero as you can, right? So that's one of those things that a lot of people don't know about, generally because they don't have that problem. But hopefully you'll have that problem sometime soon. And when you do have that problem, you'll know about it because of this YouTube video. So net operating losses and carry forward on taxes. All right, so number 5 is not so much a loophole, but more of a strategy, right? Earn income from your investments and not your job, right? So the rich are rich because they earn money, they earn their income, right? They earn their revenue stream from investments, not from their time, right? So they earn income from trading their income for assets, right? That they can then have produce money, cash flow, right? So let's say things like real estate or, I don't know, things like businesses that they buy and have other people run. So they have nothing to do with it, right? Rich people do these things, right? Where they invest in things and earn money from that and not jobs, right? Not trading their time for money at a 9-to-5, right? They're actually earning income, the majority of their income, from investments. And that is the ultimate spot where you want to end up being. So this is more of a strategy, right? Rather than a tax loophole, although it has many tax implications involved in it. But I want you to know that this is very, very important, because ultimately, this is where you want to end up, right? You absolutely want to start a business. You want to be an entrepreneur. You want to run the business. You want to own the business. You want to maybe sell the business, and you want to become an investor, right? You want to invest in things, and then you want to live off of all of that income that comes from your investments, because that's really where it's at. Because once you have a lot of investment revenue coming through, you are good. You are almost set, right? You just need to keep investing, and make sure you're making smart investment decisions. All right, so this next one is whole life insurance. All right, I am not going to go down this entire rabbit hole because there is an entire schema to this, and it's a whole big thing that basically the rich of the rich of the rich of the rich utilize to basically become their own bank. And effectively, when you buy a whole life insurance policy, yes, whole life insurance I'm talking about, even if you're like 30 years old, yeah, you can get one. and you can max it out, right? You can put as much money into it as you want. Now, over time, what happens is two things. One, that insurance policy actually compounds on itself and earns money. It's an investment. It's literally invested into the market. So it makes money for you. Number two, you can borrow against the whole life insurance policy. So at a certain rate, at a certain level, you can borrow money out of that policy, take that money, go utilize it to buy real estate, and that real estate starts producing you income. Then you can pay back slowly the whole life policy because you have a really small interest rate on that borrowing because you are your own bank, right? But then you can do it again. You can buy another real estate property, right? And you could basically rinse and repeat until kingdom come, because basically you have your own bank by doing this. So whole life insurance is something that not a lot of people talk about and way less people even understand, but it's something that the ultra rich and even this semi-rich utilize as a tax loophole or tax strategy to be able to actually access more capital and have sort of a workaround between having your money in the bank where it's really losing money to inflation to having money in an insurance policy where it's actually earning money, but it's very, very accessible. All right, so the last one I'm going to throw at you guys is deferred income. So you only have to pay taxes on the amount of money that you receive in that year, right? So in 2022, if I received $1 million in income, I got to pay taxes on $1 million in income, minus all the expenses and deductions and all that kind of stuff. But basically, if you defer your income, if you have, like, let's say a corporation, right? Like a C corporation, not talking about an LLC, not talking about, a sole proprietorship, talking about a C corporation, right? Maybe you are the, treasurer, or maybe you're the director or whatever it is, right? One of the titles at this structure, and you just so happen to defer the income that comes your way, and you don't want to take that income for that year. That means you don't have to pay taxes on that income for that year. You can just simply leave that income in the bank account for the corporation, and it just stays there. It doesn't come as income to you, and therefore you don't have that income to pay taxes on, right? So it basically is sort of like a carry forward strategy, but it's kind of similar in the sense that you're just deferring to receive that income and therefore to pay taxes on that income, right? So if you were to be owed $1 million and you said, I'd like to defer 500,000 of that, right? You don't pay taxes on 500,000 of that, right? It's as simple as that. It's literally deferring your income to a different year. All right, guys. So I know that's a lot, but there's so much more to the tax loophole, to the tax strategy, to all the tax concepts that you can utilize to lower, lessen, or even make your taxes zero completely legally, of course. And once again, this is for entertainment purposes only. This is not professional tax or legal advice whatsoever, even though these strategies are all generally true, generally do work. With that being said, I hope you guys enjoyed and got some value out of this video. Watch it twice if you have any questions, and drop a comment down below if you have any questions or comments. I'd love to see them. If so, smash that like button. Also subscribe to the channel. If you're not in our free Facebook group, join Recruiter Empire. We'd love to have you guys in there. And I will see you guys next time.